Good morning. Thank you for joining us today for our Farm Foundation Forum, Ag, Trade, and Commodity Outlook for 2023. We're glad to have the opportunity to engage with you today and are thankful to Farm Credit for their support of this forum. My name is Sherry Rogie-Fiddler, and I'm the President and CEO of Farm Foundation, located just outside of Chicago, Illinois. As a fifth-generation farmer myself, I know that the topics that we are discussing today are top of mind to farm families and our sector. While we are used to factoring in changing weather conditions, we are facing unprecedented times with disruptions and shocks from the global pandemic, a war, and added transportation challenges with the Mississippi River traffic and the possibility of a rail strike. I'm grateful to our speakers today for being with us and sharing their perspectives on the current challenges and the opportunities as we look ahead into 2023. Before we get into today's program, I'm going to take just a few minutes to share a bit more about Farm Foundation. We are a 501c3 nonprofit working at the intersection of agriculture and society to address challenges that affect the entire food and ag value chain. Specifically, we are an accelerator of practical solutions for agriculture, accelerating people and ideas into action. The three levers we use to accomplish this are policy, innovation, and education. Forums such as today's are just one part of our extensive program of work, which is guided by our mission to build trust and understanding at the intersection of agriculture and society, and our vision to build a future for farmers, our communities, and our world. We rely on partnerships to fund our work and increase our impact. So if you're interested in learning more about funding or partnering with us, I invite you to reach out to explore collaboration. Now I'd like to take just a minute to highlight our Friends of Farm Foundation program. With your enrollment as a friend, you will not only be helping to support the mission and vision of Farm Foundation, but you will also gain exclusive benefits such as first reads of our issue reports, networking opportunities, and much more. Being a friend is an investment in building a better future for farmers, our communities, and our world. To learn more about being a friend of Farm Foundation, go to farmfoundation.org/friends, and we'll also be sharing the link in the chat function today. In addition to learning more about Farm Foundation and our work by visiting our website, I encourage you to connect with us on our social media platforms. If you're posting on social media about this morning's session, we ask that you please use #FarmFoundationForum. And last, here are just a few housekeeping notes. There will be an audience question and answer session at the end of our panel today, and we'll be using the Q&A button at the top of your screen, not the chat function. So please make sure you put your questions in the Q&A section. This forum is being recorded and it will be posted on our website at farmfoundation.org, as well as our YouTube channel. And we'll send the link following today's program for that. When the forum concludes, you will receive a link to a brief survey, and Farm Foundation appreciates your feedback and your time in completing that survey. So now let's turn to today's forum topic. We have such an outstanding panel of experts joining us today, and we're grateful they can join us to share their insights on ag, trade, and the commodity outlook. The discussion will cover a broad range of topics from US-China trade to the EU farm-to-fork strategy and more. And before I introduce our panelists, I want to share my special gratitude for this panel. It's a unique set of people who have each contributed to the work of Farm Foundation. We'll be introducing them before they each speak, but just as a preview, our moderator, Brian Kuehl, and Dr. Countryman advanced our US-China trade series, and Dr. Countryman wrote an issue paper that we'll be sharing the link for that today. Ambassador Doud is one of our roundtable fellows, and he's also on the committee planning our January gathering on trade. Dr. Countryman is one of our Ag Econ fellows that is in conjunction with the Office of the Chief Economist, with Dr. Seth Meyer joining us today. They provide mentoring to the next generation of our ag scholars and Ag Econ students. So many contributions that this panel makes to Farm Foundation, advancing our work, and to our sector. So really grateful to our panelists today. And I'm just going to check in with the team today. We've had some logistics challenges with our moderator, and I just want to check in with the team to see if our moderator has arrived or if I will move forward to introduce our first speaker. So I think it looks like our moderator will be joining us soon. So I think what I'll do is introduce our moderator with the hope that he will join shortly. So our moderator for today is Brian Kuehl, and I'm pleased to introduce him. Brian is the Director of Government and Public Affairs at Pinion, formerly known as Keiko-ISM. Pinion is a 90-year-old ag business advisory and tax firm. Brian's background is in environmental law and regulations. He is a founder of Vela Environmental, a consulting firm that became part of Keiko-ISM in 2013. During the past 20 years, he has served as Chief of Staff, Legislative Director, and Environmental and Energy Advisor to U.S. Senator Max Baucus. And I'm just checking if he is here. If not, I think what I'll do is introduce our first speaker.
Gary, I am here and I apologize. We were having internet problems this morning and it is good to be on with you. I apologize for being late.
Great. Thank you, Brian. So I just introduced you and am grateful to you for moderating today. And if it's all right, I will go ahead and pass the baton to you.
Sure. So very pleased to have an impressive lineup of panelists today. First, we're going to start with Ambassador Gregg Doud. Most of you, I believe, would know Ambassador Doud from his work in the previous administration. He's now serves in an equally august role as Vice President of Global Situational Awareness and Chief Economist with the company Aimpoint Research. Aimpoint Research, I'll let Ambassador Doud talk a little bit about that role, but prior to joining Aimpoint Research, Gregg served in the office of the U.S. Trade Representative of Chief Agriculture Negotiator. He was one of the primary architects of the U.S.-China Phase 1 trade agreement. Very important agreement for U.S. agriculture generally. Gregg has previously served as president of the Commodity Markets Council. He helped to craft the 2012 Senate Farm Bill as a senior staff member of the Senate Agriculture Committee. And he served as chief economist for the National Cattlemen's Beef Association for 8 years. He is also taking the time to be with us today. I know that you are busy and have another engagement, so we're going to start with you. We'll take some questions from Gregg, and then we'll move to our other speakers. Gregg, go ahead.
Well, Brian, good morning, and thank you. I hope you can hear me here, and I'm at the Reagan Airport in the old American Lounge. Didn't quite make it to the new one before we got started today, so hopefully I won't get distracted by that. And it's also an honor to be a Farm Foundation Roundtable member. I'm on my way to Nashville to the Aimpoint Research Angel Industry War Game, and I'm going to share with you today some of the things that we're going to think through in terms of the outlook for U.S. and global agriculture going forward. I think we start this conversation, and I'll be curious to see how well I match up with Seth here later on in the day. I'm going to kind of go down through a few topics, and then he'll give you the details. I think we start this conversation with Brazil. I think it is really remarkable. 2023 will be really remarkable in terms of, as we look a year from now, and the size and scope of expansion of farm production in Brazil. We think soybean acres will be up about 4%, but I'm particularly interested to see how much corn Brazil is going to grow. USDA currently has them at 47 million tons of corn exports upcoming here. That compares to 55 out of the US. And when it comes to China, and how much corn they're going to need, USDA says 18 million tons. I think we're going to have to keep a very close eye on that. Because today, when you look at Brazil, Russia, India, China, the BRIC countries in agriculture, they're formidable. And they're talking to each other, and particularly related to fertilizer. And so I think this is a topic and seeing the potential for the world bifurcate in terms of what's going on with Brazil and Russia and China versus what's going on with the rest of the world. With regard to China, I think it's important to note the economic growth situation in China and what we see after a significant delay. China reported their third quarter GDP growth of 3.9%. And I find this very curious considering that Hong Kong recently came out with a GDP figure for the same time period of negative 4.5. So you have positive 3.9 in China at the same time. You have negative 4.5 in Hong Kong. And I don't know how you reconcile that. We do see hog prices in China that have more than doubled in the last year, despite the COVID lockdowns that continue. There's some nearly 300 million people in China experiencing basically no movement whatsoever or no economic generation whatsoever due to COVID. You've got issues in real estate, and coming out of the Party Congress, you saw President Xi talk about the importance of national security over economic growth, and we find that quite curious. Next stop is Ukraine, and obviously we could spend all day talking about that, given the developments that occurred over the weekend with Russia indicating that they're no longer going to honor the Black Sea Agreement. There are over 100 vessels in the Black Sea right now. This is a pretty chaotic situation. I spoke with fellow roundtable, fellow member, Ambassador Kip Tom over the weekend, who just returned from the Ukraine. His message was things are rather bleak. Crop they're going to produce. Even more interesting as you relate to the Ukraine and Black Sea situation is the EU farm to fork situation. And early on when Russia came into the Ukraine, the situation was that the EU was no longer going to pursue farm to fork, but a couple, 3 weeks ago, we see that they're coming back to that. That is going to be very curious with regard to what that means for the EU in terms of fertilizer production, given the price of natural gas. Here a month or so ago, anhydrous or ammonia fertilizer, nitrogen fertilizer production was down by some 70%. Moving on, I think closer to home here, I think the issue going forward next year is going to be Mexico. This is going to be an issue with AMLO for some time. We're going to see the rubber hit the road.
Hey, Greg, we are losing you a little bit. You're freezing up. We might have you try going off video and see if that helps. Greg, can you hear us? Greg, we still don't have audio. Can you hear us?
Brian, can you hear me now?
We can hear you. Yeah, keep going. I'll turn off my video and we'll see if we can get through this this day of internet connections.
This has got to be something on the Zoom side of the equation. So going forward, we just talked about Mexico and the challenge that we're going to have early on there. I think I have some good news for you, though, on the agricultural side in 2023. Going to die out here come March or April, and that's enormously good news for us in North America.
Greg, we lost you again. Greg, can you hear us? Greg, if you can hear us, let's do this. Let's have you dial in by phone and see if we can get just a solid audio connection that way. And I would ask that everyone else who's on think about questions you'd have for Ambassador Doud when he is back. Hopefully he'll dial back in. We'll take a few follow-up questions before he has to jump on his flight. Sherry, can you hear me? I want to make sure my internet connection is stable.
Yes, I can
Okay.
hear you loud and clear. Thank you.
All right. Well, I think we should probably introduce Amanda and just make this work as best we can. Does that work for you? Amanda, can you hear me?
Yes, I can.
Let's go ahead and we'll introduce Dr. Amanda Countryman. I've had the pleasure of working with Amanda on some projects over the last year, and she is just truly a pro in the field of ag and trade. She's an associate professor in the Department of Agricultural and Resource Economics at Colorado State University. Amanda's research examines the economic implications of international trade, focusing specifically on the impacts of trade reform on agriculture. She teaches undergraduate, graduate, and professional courses in international trade, agribusiness, and agricultural economics. Prior to joining the faculty at CSU, she was an agricultural economist at USDA Economic Research Service in Washington, D.C. She's also notably Farm Foundation's Agricultural Economics Trade Fellow. And that's where I've had the joy of working with Amanda. She and I participated in a recent salon series. Salon sounds like such a fancy word, but fancy word for small dinners. I'm going to start my video. I had it off just worried about the internet connection, but we'll try this. So Amanda and I partnered on a number of small dinners focusing on the intersection of China and trade. And then we also had the experience of co-teaching a course a couple of months ago on ag trade, sort of ag trade 101. So Amanda, great to see you and wonderful to have you on. And let's go ahead and have you run through your presentation. And then if Ambassador Doud comes back in, we'll interrupt you. Is that okay?
Can we just
Yes.
check if Gregg is back yet?
I see Gregg on here now. Gregg,
That's-
you want to check your connection and see if we can hear you okay? Okay, I see Gregg, but he is still muted.
Gregg, are you with us? While and our apologies for this. I think everyone probably has been on enough Zoom calls and webinars to know sometimes the internet gods do not cooperate, or the Zoom gods. Ambassador Doud, are you there?
Brian, Brian, can you hear me?
I can. And have you dialed in on a phone now?
Yeah, I've dialed in. It's really strange what's going on here because I've got full signal, yet it is flashing in and out. I apologize. Let me kind of wrap up my remarks here quickly, and we'll go to some questions. Where I left off talking about Mexico and biotech. I was going to kind of close my remarks talking about some good news. I think we have really good news in 2023 in agriculture, starting with the fact that this pesky doggone La Nina is finally going to conk out here, hopefully in about March or April. And given the drought in the United States and the situation that we're in here, we can't handle any more of this. And I think finally we're going to get some relief from Mother Nature here. I think 2023 is going to be a big change for us in terms of renewable green diesel and the big expansion in that, and the production of that commodity is going to come online here in a big way. And I think 2022 has been a tremendous year for us in terms of meat exports. And frankly, I think that's going to continue despite the turmoil in the world and everything that's going on. I do have the sense that China's going to continue to stick with us in terms of beef trade and on the meat side of the equation, despite all the difficulties and everything going on. On the policy side of the equation, I just wish everybody in Washington would take a hard look at where we want to be 10 years from now, and what is the strategy that we need to implement today to get us where we need to be going forward. And I think that conversation starts with the UK. I think we need to continue to engage with Kenya and Ecuador, Southeast Asia. I appreciate the Indo-Pacific partnership and what this administration is talking about there. But I do believe, based upon all the conversations I have, there's going to be precious little related to agriculture or ag market access in that discussion. But that's okay. That's okay for now, because we need to continue to focus on Southeast Asia and whether that's a trade and investment framework agreement with Taiwan, and I think those talks need to continue, or hopefully they will. What we can do in terms of a digital aspect, financial services, et cetera, in Southeast Asia, that's all important work and a precursor to moving us on down the road there. And I think given the competition that we're going to see from Brazil and the relationships between Brazil and Russia and China going forward in agriculture, I think the concentration and emphasis on Southeast Asia is warranted, and hopefully we can give that a little more energy here going forward in the coming year and beyond. And so with that, Brian, I'm going to stop and see if there are any questions, and hopefully not have any more interruptions.
Well, and I think everyone understands the vagaries of internet connection. So we do have a couple of good questions. I would remind people, if you would like to ask a question of Ambassador Doud, please put it in the Q&A box at the bottom of your screen. And Ambassador Doud, I'm gonna invoke facilitator's privilege and ask the first question. And I think I'd ask you to elaborate on the Indo-Pacific Economic Framework, IPEF. I think most in the agriculture community and the U.S. agriculture community agree that it's good that we're engaging in Southeast Asia. There are clearly growth markets there with growing middle class and large populations. But I think there's also disappointment that there's not a bigger emphasis on market access and tariff reduction in particular. Talk to us a little bit about the role that tariffs play in terms of market access and how we might want to approach that as a country in terms of Southeast Asia access.
You know, it is the requisite question in trade policy here today in agriculture. And my answer to that is, you know, the tariffs aren't that significant of an impediment in agricultural trade today in that part of the world. There's still some tariffs there in the 8, 10, 15, maybe even 20% range in some cases. But you know, a 10% tariff isn't prohibitive and kept us out of the market like we dealt with in South Korea for years, or like what we had with Japan before we got the phase 1 agreement. And so with keeping in mind now with Japan, we have TPP treatment in agriculture for over 90% of our trade in that part of the world. The only thing we don't have is where we had to share tariff-free quotas with other countries. We're in great shape. You know, countries like Taiwan, the tariffs aren't that high. Much more needed work, in my opinion, in dealing with SBS issues in places and licensing issues with Indonesia. Would really like to see us work with Indonesia, and we had a great relationship with them, with their trade minister. He was their ambassador here, then became trade minister over there. I think there's real opportunity to work with them over there in that part of the world. So as I said in my remarks, let's keep working in that part of the world, despite the fact that it isn't necessarily agricultural market access. There can be a lot of things done here to build upon those relationships and quite frankly, keep those countries in our orbit with regard to these issues and regulatory ways of doing business as opposed to China.
Great, thank you for that, and that's heartening to hear that perspective. The first question we have in the Q&A box is asking, can and when can we expect a resolution to the Black Sea Agreement? And I'm assuming that's referring to grain exports from Ukraine. And I know you touched on this in your remarks. Am I correct that Turkey is shepherding grain barges at this point, and that there may be some sense that even if Russia is not respecting the agreement, we may still see grain exports? What can you tell us on that?
Well, there was an agreement that Turkey had brokered that was to last until November the 19th that facilitated safe passage of these vessels coming out of Odessa and Ukraine into the Black Sea through the strait there. And Russia indicated over the weekend that, and I'm not sure exactly what their argument was, that they were no longer going to abide by that agreement. Well, what that would typically mean, if you're a vessel owner and you've got your vessel in that part of the world, you're going to scatter. You don't want to be hit by some missile over there. So this is really problematic for Ukraine grain coming out of there. The question is, given this situation, does a vessel owner want to even mess with loading Russian grain? And of course, if you're a major exporter and the potential exists for some of that Russian grain to actually have Ukrainian grain loaded on in part of that transaction, the potential for some liability for you it certainly exists. And so are you going to participate in that trade in that part of the world? So it really raises a lot of questions about how much grain can come out of that part of the world. And then the final answer to the question, I think, is if you talk to my colleagues at Aimpoint Research, these are West Point guys, career military guys that are experts in this part of the world. They make it very clear that they expect that this conflict will occur and continue to go on for years and years. And so the answer to the question is, don't see any resolution to any of this in any short period of time. Unfortunately, it's rather tragic.
Great. Thank you for that. And that's certainly something I think everyone is watching closely. Ambassador Doud, talk to us about whether there are trade implications from the Lula win, and if Bolsonaro, I haven't seen the news yet this morning, if he does not concede, what do you think the trade implications are with respect to agriculture in Brazil, given both the potential of a Lula win and what that would mean, and the potential of a conflict between Lula and Bolsonaro?
It's a great question. I don't know the answer to that. I do know my general sense in Brazil, though, is regardless of who it is as president of Brazil, agriculture in Brazil has the upper hand today. They have a lot of influence on both sides. What I think you've seen in Brazil as a result of this uncertainty and the lack of enforcement of whatever laws they have down there on the frontier is that it's been the Wild West, and there's been a lot of effort to open up additional farmland on the frontier in Brazil. And so the question is, once that is settled down and they know more who's going to be in charge going forward, is there a clamp down on that? I think that's the question. So when you have this type of uncertainty, that frees folks up to just kind of go crazy in that part of the world. And we've certainly seen that based upon the intelligence that I've seen.
Great. Let's talk a little bit about Mexico. You cut out a little bit when you were talking about Mexico. So maybe before getting into a couple of questions, I'll ask you to recap some of your observations on Mexico, and then we'll ask a couple questions specifically about biotech and GMO corn.
Yeah, Mexico and AMLO and biotech has been an issue that has been near and dear to him since day one. He's made it very clear that, particularly with regard to corn, he's not a big fan of it. There have been some approvals of biotech trades down in Mexico, but nothing really related to corn or major commodities that I'm aware of, at least anyway. Maybe there have been, but I'm not aware of anything significant. So the first point is that Mexico, this is, other than China, this is our biggest corn market for U.S. corn exports, yellow corn. And they're not going to approve biotech trades. They're not going to get commercialized because there's no way to keep all of that separate and send one thing to Mexico and something else to the rest of the world. So this is really inhibiting our ability to improve our technology in the biotech space in corn. Part of the Mexican issue is, well, they it's white corn to them for human consumption is what they grow. We do export some white corn to them. That is biotech, and I think this is where a lot of the sensitivity is. But the answer to the question is, I really don't know whether early next year, when his self-imposed deadline for all of this in terms of stopping the potential imports of U.S. corn is going to happen or not. It would certainly not be in Mexico's best interest for that to happen. We'll just have to see it, and I think certainly my former colleagues are highly engaged in this, and this administration is engaged in this at the highest levels, and this is an important topic on the trade policy side early in the new year, without question.
So do you, that's great that you sound somewhat optimistic on a resolution. Do you think that is a voluntary resolution by Mexico? Do you think it's a USMCA case? Do you think it's pressure from the US? All of the above?
I think the potential exists for any of those options, fortunately. So I think though that you know that they're just this is one of those things where AMLO is dug in, and so we're gonna have to really bear down with Mexico and work through this, and it's going to be a very high priority topic between the U.S. and Mexico in agriculture, and as the Mexico deadline that they've imposed approaches here, this is going to get serious.
And why is AMLO so dug in on this? Do you have some insights into domestic politics in Mexico and what's driving this flashpoint?
I think you've asked exactly the right question that I do not have an answer to. That is the question, and the challenge is what is it about this issue? Is it playing to a political base, or is the fact that he just frankly is something that he doesn't want to allow to happen? I don't know the answer to that question.
Absolutely. I think that everyone is trying to read the tea leaves and understand his political stance, and it's not often transparent as to what's driving these types of flashpoints.
All I can tell you with regard to that issue is he is dug in.
That seems to be right, and I know some of his recent cabinet shuffles suggest he's entrenching, not moving the other direction. So let's move to another part of the world, and talk about two countries or two regions that I think are fascinating, and I think a lot of people wonder what the future holds. One is Africa. What do you see as a potential for growth of trade with Africa, and what are the impediments to that? Do you see a path where countries in subcontinent Africa can become significant players in global agricultural production? And then second, India, same basic question. Obviously, India is already a player in its own right, but has a lot of challenges when it comes to trade. Maybe you could reflect both on Africa and India for a moment.
Yeah, I think we've had some really good preliminary conversations with Kenya previously, and it's hard to believe now that was almost 2 years ago. But I think you've seen Kenya make some moves here with regard to biotechnology that are encouraging. I think there are countries, at least from my conversations, that are less and less interested in following the EU regulatory regime, particularly down the path of the Farm to Fork initiative. So I think we have to engage with African countries on the regulatory and the SBS side of the equation, and I think most of them are willing to have. They want to pursue that with the United States. I think we need to show more leadership in that regard. The potential for trade is there, but it's on down the road a ways. I mean, Kenya is only a $700 million market for U.S. ag exports, but the potential is there. If you can get the pilot program going in the base camp, you're going to have lots of potential going forward in future decades. With regard to India, it's a really great question, and the answer is in the year 2020, we spent at USTR about a year with India and the trade minister there trying to figure a way and a path through for a very, very modest agreement. And we were unsuccessful, and it was frustrating. And the frustration in India with regard to reform of agricultural policy in any way, shape, or form is excruciatingly difficult. As most people don't know, they tried to reform their agricultural markets here 2 or 3 years ago. After 2 or 3 years of trying to implement a law that they had passed, they had to abandon the effort because of the resistance within different sections of the agricultural community. We were unsuccessful because of that same type of resistance. India has some of the highest tariffs, or they do have the highest tariffs, of around 100% on agricultural products imported from anywhere in the world. They're very, very difficult. It's a market with enormous potential, not just for us, but for everywhere around the world. But as of right now, the ability to penetrate that is just not happening.
Yeah, it is a fascinating situation. And those farmer protests, I know that I know that people feel sometimes like US politics are a little bare knuckle, but you you look at the Indian farmer protests and you realize like we're very tame by comparison. I feel sympathy for those who were on the receiving end of those protests.
That's the most understated thing you could have said about that, Brian. That is correct.
I try to be politic when I can. Talk to us a little bit about the strength of the US dollar and how that is affecting global trade flows, and specifically in some of the countries that are maybe less capitalized or less financial oriented, Southeast Asia or again, Africa. How do you see the strength of the dollar impacting these issues?
It's a great question, and I'm going to answer it this way. If you look at the top 10 economies in the world, starting with the U.S., number 2 is China, number 3 is Japan, which is actually in fairly decent shape, relatively speaking. We've talked about China is in really, really difficult shape. Number 4 is Germany. It's a disaster there, and even worse, number 5 is the U.K. Then you have Russia in there at number 11. The point being, if you've got the second, fourth, and fifth largest economies in the world in a really seriously difficult recessionary spot, the U.S. economy isn't doing great, but it's doing better than anybody else. It's the old adage, 2 guys running away from a bear. You don't have to outrun the bear, you just have to outrun the other guy. Well, in doing so, it is creating a situation where the strength of our currency is much higher than these other folks. Our interest rates are higher, and that attracts U.S. dollars. Unfortunately, I just don't see a situation, at least in the coming year, and maybe a little beyond that, where that's going to change. And that is because of the difficulty these other major economies in the world are having.
And so does that portend fewer ag exports? I mean, stronger dollar hurts our ability to export. Is that correct?
I think it's going to be a challenge for us in certain parts of the world where per capita incomes are kind of below that middle income threshold. And then you combine that with the fact that I think Brazil is just going to be absolutely, busting the bins down there here as we get into the middle of next year. We need some water in the Mississippi River somewhere along the way as well here. So I think the combination of these factors just means that 2022, we're probably going to have another record in terms of U.S. ag exports, but 2023 we're going to have some very, very serious headwinds, both in terms of demand destruction in the world, supplies from competitors, and the strength in the value of the dollar.
And I'm glad you mentioned the Mississippi, and we're going to take just a couple more questions. I want to be sensitive to your time, Ambassador, but I'm glad you mentioned the Mississippi and water flows. Talk to us a little bit about transport disruptions. I mean, we've seen pretty big disruptions on the Mississippi with barge traffic. We also have the potential of a rail strike. What keeps you up at night when you think about U.S. transportation and what it means for agriculture?
Well, I think the issue is we have 2 options. We can go to the West Coast and go through Portland. We still, my understanding is you get out into December, January, there's still a little room there for some elevations in the corn and soybean areas, but it's just cost prohibitive right now to move a barge of grain down the Mississippi and be competitive in the world marketplace. And that's unfortunate because our window on soybeans is really the middle of September through the middle of February. And so my point is, if we can't get this stuff down the Mississippi by the middle of February and get it loaded on a boat, we're going to miss our window. The Brazilians are going to take over, and there are going to be some really disappointing trade numbers here by the time we get to the middle of next year. There's no question about it. The other side that I'm really concerned about in this isn't just getting stuff down the river, is we need some water in that river so we can get some fertilizer up that river before spring planting. And if we can't do that, that is going to be an issue, folks. We need this La Nina to croak out.
If we can just have more rain, everything will be better. I think that's they say.
Well,
hope
and the good
is not
news
a
is
strategy.
that Right. The good news is the forecast is for this La Nina to finally give up the ghost here by about March or April, and hope. I think we're looking for some pattern changes coming here over the winter. They can't happen soon enough.
All right, last question, Ambassador Doud. Let's talk about the prospects for a bilateral trade deal with Taiwan after current precursor talks. Will China's threats to Taiwan accelerate future bilateral talks on a long-sought FTA, or where do you see that conversation and relationship going?
That's a sensitive topic. My opinion and advice on that subject in this kind of forum would be, let's continue to work on the trade and investment framework agreement, the TIFA. Let's continue. There's a lot of work there that continues. It has to be done as a precursor to an FTA. Let's continue to work on the issue and work on our relationship with Taiwan and see where that goes, and hopefully we can have some success there and continue to advance our relationship. I would say this, in terms of agricultural market access into Taiwan, the tariffs are not a serious impediment to trade. They're generally relatively low, and I would say plus or minus 10%, generally speaking. So, whether they're 5 or 15, in that kind of range. But it would really be nice to continue to work on regulatory issues, SBS issues, et cetera, and I think we're going to do that.
Wonderful. Is there anything you would like to say in closing before we let you get to your plane?
I think we'll let you get on to the next speaker here. My sincere apologies for the technical problems here today, folks, and we'll look forward to seeing everybody in Savannah the middle of January. I think we've been working hard on a program there, and that hopefully you guys will get to see soon. They're roundtable members. I'm pretty excited about it.
Wonderful. Well, Ambassador, on behalf of the whole group, first let me thank you for your service, for being in public service and playing the important role that you played on behalf of our country. I think public service is often undervalued, and we know that it's not always easy, and often it is difficult. And so thank you for taking part of your life to do that on our behalf. We very much appreciate it. And then thank you for the role that you play with Farm Foundation and for participating in today's forum. We very much appreciate that as well.
Brian, thank you very much. Have a nice day.
All right. Good. Well, listen, we are on time and on track, so I'm feeling good about that. We're going to go to Amanda now, Amanda Countryman. I did give a quick introduction to Dr. Countryman, but real quick highlights again for the sake of completeness. So she is a professor in the Department of Agriculture and Resource Economics at Colorado State University. She's Farm Foundation's Agricultural Economics Trade Fellow. And she recently authored a paper on U.S.-China trade that was a summary of the dinner conversations that we held last year and early this year. Really interesting analysis and feedback that we heard from people throughout those dinners. I would encourage everyone to check it out. I believe that a link to that paper has been posted in the chat box for this forum. So go into the chat box, look for that paper link. Please do download it and read it. And we're really honored to have Dr. Countryman both serving as the Farm Foundation's Agricultural Economics Trade Fellow and also being with us here today. So Amanda, without further ado, why don't I turn the microphone over to you?
Thanks, Brian. So again, I'm going to go through a trade policy, an agricultural trade and policy overview. And before I jump in, I just want to give a huge appreciation, a big thank you to the Farm Foundation and the USDA Office of the Chief Economist, who are sponsoring my Farm Foundation Fellowship as the Agricultural Economics Trade Fellow. So thank you so much for that support. It is very much appreciated. And on the next slide, you can see an outline of some of the key points that I'm going to talk through this morning as a jumping off point. And big thanks again to Ambassador Doud for giving us an overview of some key topics that are really, really important for agricultural trade. And I'm going to take a little bit of a step back and go through an agricultural trade snapshot to give us an idea of the importance of US trade and some of the key products that we're exporting, importing, and who our key trade partners are. Then I'm going to talk a bit about the war in Ukraine, and then we can answer some more questions about that during the Q&A session. And I'll also talk a bit about US-China trade. So as Brian mentioned, we had a really interesting series of dinner events with US agriculturalists, and I'll talk about some of the highlights from what we learned through that engagement. I'll also talk about some highlights for US agricultural trade policy, and then also highlight some additional global challenges and uncertainty. So on the next slide, you can see that we have tremendous strength in exports for US agriculture, and we also import a lot. So we've had record exports forecasted for 2022 at $193.5 billion and imports at 197. On the next slide, you can see the key trade products that we are exporting, with grains and feeds at the top, followed by oilseeds and oilseeds products, livestock, dairy, and poultry, followed by horticultural products. On the next slide, this shows the key trade partners who we export agricultural products to. So you can see that our top export partners are China, Canada, and Mexico. On the next slide, we can see the key products that we import from the agricultural side. Horticultural products top the charts for agricultural imports, followed by sugar and tropical products, livestock, dairy, and poultry, then grains and feeds, and oilseeds products. On the next slide, you can see our key import partners, so who we import from. That is led by Canada, Mexico, and the European Union. So on the next slide, I want to focus a bit on some of the challenges that we have for agricultural trade. The first thing that we'll focus on is the war in Ukraine and the impact that that has on agricultural trade and production. A bit on the conflict with China. A little bit on inflation, the impact of increased input prices, prices for fuel, and fertilizer. Also, as Ambassador Doud already mentioned, exchange rates are an important part of agricultural trade. We'll talk a little bit about transport logistics for both inputs and final products. And then we'll conclude with trade policy, thinking about not only tariff barriers, but also non-tariff barriers. And we'll think a little bit more about the barriers that are barriers to trade related to plant and animal health. So now I want to talk a bit about the war in Ukraine. So when we think about the importance of Russia and Ukraine, combined, Russia and Ukraine account for 12% of global agricultural exports. Equally important, this region also comprises 20% of fertilizer exports in the world. So really important fertilizer suppliers. When we think about the share of Russia and Ukraine in global markets, the graph on the top left of the slide, you can see that for barley, corn, sunflower oil, and wheat, both Russia and Ukraine are incredibly important. The other thing I want to highlight is that we had a Farm Foundation forum specifically focused on the war in Ukraine and the implications for agriculture. And there is a recording of that is available online. And that was a forum that occurred in the spring where we focused a lot more on the details of the war in Ukraine. When we get to thinking more about fertilizer, this region is an incredibly important source of fertilizer. We can see that for nitrogen, excuse me, Russia is responsible for 15% of nitrogen fertilizer in the world, 14% of phosphate, and 19% for potash. So again, Russia is incredibly important. Next on the line, you'll see China, also critically important fertilizer supplier, 13% of nitrogen-based fertilizer, 25% of phosphate, and 34% of potash. Another important country that is a part of this conflict is Belarus. Belarus is an incredibly important supplier of fertilizer, and there are challenges for fertilizer supplies from Belarus because of their being an ally with Russia. So as Ambassador Doud mentioned, we've had some recent developments on challenges for shipping agricultural products from Ukraine to the rest of the world. So starting in the late summer, Ukraine was actually able to export agricultural products in the Black Sea because Russia agreed to allow the safe passage of agricultural products. However, there's recently has been, as Ambassador Doud mentioned, Russia is no longer going to allow this to happen, which is an extreme concern. So along with the challenges of not only being able to actually access Ukrainian agricultural products, the other important thing to think about is that not only do we not have the ability to ship products, but there's also tremendous damage to the agricultural sector in Ukraine. So I'm working with Ukrainian colleagues at the Kuehl School of Economics and the Agro Center, trying to understand the implications of the negative impacts on the agricultural sector in Ukraine. So the chart on the bottom right shows that we can think about the damages to the agricultural sector that are going to have long-lasting implications for the ability of Ukraine to produce agricultural products that are needed. So on the next slide, we can see that during this time of tremendous uncertainty and tension, on the left, we have a figure of food and fertilizer prices. So one of the big challenges on the far right, you can see that after the Russian invasion of Ukraine, we had food and fertilizer prices were already elevated, but then they continued to trend upward substantially. So on the right, we can see that prices for energy, food, and energy, metals, and agriculture have started to come down over the past few months. However, the important thing to note on the bottom right is that while prices have come down from their high earlier in the year, the one sector that still has elevated prices or increasing prices is fertilizer. So that is, again, one of the big challenges is that food prices, even though they've come down a bit, they are still elevated much higher than previous years in the recent past. And fertilizer prices are also continuing to go up. So again, this is going to be a tremendous challenge for agriculture. So not only can we actually have access to fertilizer from this part of the world that has this conflict, but are we even going to be able to afford the fertilizer that is being sourced when you can get it? So on the next slide, we can see that the importance of Ukraine for other countries. So when we think about the share of imported calories that are not only dependent on Ukraine and Russia, but also those imported calories that face export restrictions. So when we have these high food prices, countries make efforts to try to mitigate these challenges for their country. So then we can enter into force trade policy restrictions. So when we have concerns of food security and food prices, countries tend to put export restrictions on products. And we can see here that we can compare what has happened previously in the food price crisis in 2008, what happened during COVID-19 when there were concerns of food security and food availability. And then on the right, we can see the share of calories that face imported calories that face export restrictions during the Ukraine crisis. So the other important challenge of having export restrictions in the face of uncertainty in the market, we can see that this disproportionately negatively affects least developed countries. So 26.3% of imported calories imported by LDCs face export restrictions, which means that amplifies the cost of those particular imports. On the next slide, we can see that these increased elevated prices of agricultural products leads to increased price volatility and increased food insecurity. So we can see on the left-hand side, this shows the volatility warning for key agricultural commodities that are traded around the world. So we can see that hard wheat, soft wheat, soybeans, cotton, those agricultural exports, those markets have seen volatility for the past year. On the right-hand side, we can see that even though we've had agricultural commodity prices, food prices, start to come down early in the spring this year, they're still well above 2019, 2020, and 21 price levels. So again, concerning having these elevated prices, especially in the context of challenges for least developed countries and food security. So on the next slide, we're going to switch gears a bit, and we're going to start talking about the conflict that we have, the continued challenge that we have when it comes to trade with China. So as Ambassador Doud mentioned briefly, the US worked very hard to get a phase 1 trade agreement with China in response to the trade war that emerged in 2018 between the US and China. So the chart in the middle of this, on the right in the middle of the slide, shows the evolution of the trade war tariffs. So we can see on the bottom, the dashed lines show Chinese tariffs on the rest of the world and US tariffs on the rest of the world. And that is kind of our basis. You can see how the current state of tariffs between the US and China are much higher than the rest of the world. So the important thing to know is that we still have very high elevated tariff levels, even though on average, even though we have a trade agreement with China as a first step, the phase 1 trade deal. So the current state of the trade war, or the trade actions that took place, is that September 2020 tariffs were cut in half. Previous rounds of tariffs remain, but it's important to note that there are important exclusions for key agricultural imports into China, including US agriculture. So we have a number of US agricultural products that have been able to have exclusions from these retaliatory or trade actions, these tariffs. When we think about total trade from the US, 58.3% of US exports face retaliatory tariffs, while 66.4% of Chinese exports face these US elevated retaliatory tariffs. When we think about commitments from China, there have been commitments for food safety and non-tariff measure reductions, intellectual property protections, improved foreign investment and currency commitments. And a big component of the phase 1 trade deal with China was the agreement to purchase an additional $200 billion of products above 2017 levels. And there was a big component of purchase of agricultural products. On the next slide, I'd like to talk a bit about the importance of China. So why is China so important? It's the #1 US agricultural export market. We can see this big dip on the left graph in 2018. That was the start of the trade conflict. And we've seen exports exponentially increase after improving relations with China and reaching the phase 1 trade deal. On the right, we can see that exports to China are dominated by soybeans, and then followed by corn and other agricultural products. On the next slide, I'd like to talk a little bit about the important lessons that we learned from convening agricultural stakeholders from all over the agricultural supply chain, from production, marketing, to final goods suppliers. So the key themes that came from agriculturalists in terms of their perspectives on trade with China and the future for ag trade with China, #1, front and center, was trust and stability, the need for trust and stability, and how the hot and cold or big swings in Chinese purchasing is an incredible risk management challenge. There was a lot of discussion on the challenges associated with increased input prices and other supply chain challenges. Fertilizer and shipping were the hot topics there. Food security and production practices and factors related to these two key components were also discussed quite a bit. There are a lot of worries about high food prices, which we just talked about, and just a decreased availability of food around the world was a concern highlighted by US agriculturalists. And there are a lot of concerns about production constraints given the EU farm to fork strategy. And again, Farm Foundation has a recent issue report that discusses this in detail, and I encourage you to check that out. Trade policy was central in all of the conversations we had with agriculturalists. There was widespread disappointment that US trade policy hasn't moved forward in terms of market access. There's universal to a desire to advance trade policy with China beyond phase 1 and with other trade partners, and that highlighted the need for export market diversification. So on the next slide, let's think about the importance of having free trade agreements or preferential trade agreements with trade partners. So we can see that in the yellow line, this shows the rest of the world that the US does not have preferential trade agreements or free trade agreements with. And in the bottom in red, we have China. You can see over time, the growth in the blue line, the growth in trade between the US and FTA partners. On the next slide, we can see the growth in agricultural trade. In yellow on the left, we have US exports, and we have this for specific countries, and we have this for agricultural products on the right. In yellow, we can see the share of US exports to FTA countries before an agreement went into effect. And then on the right, we can see the increase in agricultural exports to FTA countries after those trade agreements went into effect. On the next slide, we can think about the different preferential trade agreements that countries have around the world. So the key here is that Europe leads the world in terms of trade agreements, followed by East Asia, then South America, and North America comes in after that. So the US has 14 free trade agreements, and the US is lagging with a lot of other key agricultural exporters in Europe, East Asia, South America, and we also lag Mexico in terms of our free trade agreements that we have in place. On the next slide, I want to focus a bit on East Asia. So we have 3 large trade agreements: the Regional Comprehensive Economic Partnership, the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, and ASEAN, the Association of Southeast Asian Nations. So these are 3 massive trade agreements that encompass the Asia-Pacific region. And it's important to highlight that the US is not a part of that agreement. On the next slide, we can see that the US response to not being a part of a traditional free trade agreement was to move forward on the Indo-Pacific Economic Framework. So this is 13 countries, not including China. The highlight here is that this is not a trade deal. There are no tariff changes, but this is really an agreement and an effort to increase economic cooperation between these countries. So on the next slide, I think there is a lot of potential for US agreement. We have potential for expanded trade agreement with China, the UK, the European Union, Kenya, which also can lead to potential for the East African community. And I think we need more than the Indo-Pacific Economic Framework in the Asia Pacific. So some priorities: I think it is important to recognize the need for additional market access. We can expect a focus on small and medium-sized enterprises. And again, as Ambassador Doud mentioned, the need to harmonize regulations for trade, labor, the environment, and non-tariff barriers that affect trade. On our next slide, I just want to highlight again the challenges that we face in terms of agricultural trade. The war in Ukraine continues. China trade continues as a concern. We have uncertainty for US and global trade policy. As mentioned, the US lags others when moving forward with trade agreements. And trade policy responses to food crisis increase volatility, and that is of concern. Supply chain challenges both domestically and abroad persist, and food affordability and availability is challenging. The list goes on. So the next slide, to just wrap up, I have cautious optimism. US ag is faring well relative to other sectors. Ag export strength for the US continues despite the strength of the dollar, but we have continued potential for shocks from all of these things that we've already been talking about. So thank you for that, and I will leave it with that. And thanks, Brian.
Absolutely, and thank you, Amanda. Very, very much appreciated. That was a lot of information in a short period of time. We will have an opportunity for Q&A so that people can dive into some of these questions in greater detail and give you an opportunity to elaborate on some of those points. We're going to do the Q&A for Dr. Countryman and also Dr. Meyer together. So if you have questions from the presentation you just heard or the presentation you're about to hear, please put them in the Q&A box, just like we did with Ambassador Doud. But now let's go to our final speaker. And again, my hat's off to Farm Foundation for the quality of the speakers that they're able to line up for these types of forums. I think that's reflected also in the participation that we see. We're nearing 200 people dialing in for this forum, and that's really an amazing number. So our final speaker before we go to the audience Q&A session is Dr. Seth Meyer. Seth was appointed USDA's chief economist in January of 2020, returning to USDA after 2 years away, during which he was research professor and associate director for the Food and Agriculture Policy Research Institute at the University of Missouri. He was previously head of the World Agricultural Outlook Board in the Office of the Chief Economist and served as economist with Food and Agriculture Organization of the United Nations. And he's also been a visiting scholar at several research institutions around the world. When it comes to agriculture economics, there are few people who can speak as knowledgeably as Dr. Meyer. Dr. Meyer, we're pleased to have you on, and I will hand the microphone to you.
All right, thank you very much. And let me share my screen a moment here. And of course, show all windows. Okay, here we are. I apologize for that. So let's get started. And I think I'm in a bit of a difficult position, in part because it's hard to come last. It's hard to come after two very knowledgeable speakers who speak very broadly about trade and the dynamics of trade and what's going on. I'll tell you, this is really going to be a presentation about the things that are right in front of my face at the moment. And I don't think the last couple years in terms of market uncertainty have helped me with my procrastination. If I put together a presentation a week ago, there are aspects of it which are no longer relevant today. So what you'll see is everything that's in front of me that I think is on my mind when it comes to agricultural trade, and specifically U.S. agricultural trade. And again, some of this you'll have seen from our prior speakers, so I won't dwell on it too long. I think we already saw this to some extent. It talks about the fact that we have seen a strong rebound after the trade agreement with China, where we've seen strong year-over-year growth in U.S. agricultural trade value. Again, this is value, and some of this is price induced for that 2022 number. But again, strong growth in agricultural trade value and expecting it to hang in there over the coming year. And you got a touch of this in some of the previous presentations. Certainly, you got to look at who contributed a large amount to the increase in trade the last few years. Clearly, that's China. But I think that there's another way to read this graph as well, too, and saying we've had strong growth there in value with Canada and Mexico. So one way to read this is also that China did not crowd out Canada and Mexico when it came to U.S. trade. We've seen pretty good strength and see our trading partners hang in there as trade value has grown, and some of that being an increase in prices. And looking again at a pretty flat trade picture in the coming year. I wouldn't get too hung up on what the exact number is yet. We got a long way to go. And the last couple of years have been really hard on folks that try and predict these things. So when we look at overall, and I'm going to focus a little bit on U.S. agricultural export competitiveness, but we've seen very high and very volatile prices. So what I've got here for you is stocks to use ratios, both in the world, less China. And why less China? Because those stocks are not known with precision and also not accessible to the world, depending on, no matter what their size. And on the right is stocks to use in the United States. And I think what you generally see here is that we are expecting to leave this crop year with a tighter stocks situation than we began this year, this marketing year we just began as we've been harvesting these crops. So we might hope for a big crop. Ambassador Doud talk about the strong rebound in the South American crop. We would expect a rebound in the size of the South American crop simply based upon a normal weather picture as well, too, for the South Americans. They had a drought-affected crop the prior year when it came to soybeans. We might expect a rebound, but I would argue that the market needs that rebound in production. They need that normal crop to attempt to cool prices a little bit. And so at a global level, soybean stocks may be one area where we may see some stock improvements. The United States is a little bit of a different picture. And as I'll focus on the U.S., I'll talk to you a bit about why we're actually seeing U.S. stocks to use ratios for soybeans fall. Now, I'm going to start with a very long picture here of commodity prices of wheat and corn. And this is different origins for wheat and corn. So this is free on board prices for a number of different origins. So this is pork prices for wheat and corn. And you notice that over time, a couple things to note out of this. First of all, these prices tend to move together, right? You can buy your wheat or your corn from many different locations. And so these prices have historically tended to move together. The other thing to take a look out of this is we've seen commodity prices rising basically since the fall of 2020, first on demand, then some weather-induced supply shocks. And then what you can clearly see is war effects, and it's most noticeable here in wheat, where you see them jump up, and then as we get a grain corridor agreement, they come down a little bit. But you also, if we zoom in on some of that as well too, you'll notice that those spreads have also changed. Origins have also changed. Part of that is this issue of Black Sea disturbances. You have FOB prices for Russia and Ukraine being lower because of where that grain ends up or the risk of being able to access it. You see improvements when a grain deal occurs. And that to me is one of the uncertainties here is we hear the grain deal, the Russians have suspended it. What does that mean? Does that mean canceled? Does that mean an active closing of it? Does it mean a passive closing of it, where it's the insurance companies that essentially draw trade to a close out of the Black Sea? But here we've seen some big spread changes on origins, I think in particularly wheat, and you can see it in corn as well too, where we are expensive origins when it comes to corn and wheat and some agricultural commodities. Part of this is, hey, we talked about this as well too. The strength of the US dollar does add yet another, it's another piece of the puzzle when it comes to our export competitiveness. We've seen a lot of dollar strength that makes us less competitive in the global market. I think it's also worthwhile to stop here and talk about some things pragmatically as well too. At a global level, there's enough wheat to go around. It's expensive and it's maybe going to be a little more costly to get it to where it needs to be. But given dollar strength, there are some import dependent developing countries who let's be pragmatic about food aid in this instance, right? So let's separate out folks who simply can't afford it from higher prices. And here we see the dollar strength does inhibit our ability to export, which also contributes to us being some of the higher priced origins at the moment, also given our tightness in our domestic market. And then we also heard about fertilizer prices. And while fertilizer prices have come down from their peak immediately following the war, the start of the war, the ending of the grain deal calls into some question perhaps about movement of that product from the Black Sea. As food and fertilizer doesn't fall under sanctions. So it's not that, it's just how much is this stuff going to move and what are the risks associated with moving some of these things as well too. We've seen fertilizer prices come down, but producers in the US who may have purchased fertilizer earlier for this crop that they're harvesting now are now facing the full brunt of these higher fertilizer prices. And I'll note that this is all Gulf pricing. And as Ambassador Doud noted, you got to get it back up the river, and the river is not running at full efficiency, and its capacity is being constrained by low water levels. Another thing that's contributing to our lack of export competitiveness. And it's easy to see why the river's at a low level. Here I've got you a map of the, some key areas on the lower part of the river overlaid with the drought monitor in the United States. And you can see that the drought encompasses the Mississippi River Basin. Okay, so this is where we're at the moment. And this is a period where in the fall, the backhaul can be fertilizer moving back up the river. And so I think that that's what Ambassador Doud was alluding to. But at the moment, folks are really worried about moving grain down the river. That's the primary effect here. And what we've seen is we see changes in barge rates and changes in inland basis as a result. So one can envision the price at the Gulf and the price upstream being separated by the cost of moving that grain to export. And so as that cost widens, because barges have to be loaded at a lower draft, it separates those two prices. So if you're trying to sell soybeans into the spot market in a place heavily dependent on the upper Mississippi River or the Mississippi River, you're going to be facing paying for that transportation wedge that exists at lower river levels. So what does that look like? So here's a basis map that basically says, what's the inland price versus the Gulf export price? So truly trying to look at what is the cost of transportation in getting it down the river. And this is also balanced by the fact of what other alternatives there are. And there are fewer alternatives. So you see these darker colors from Southern Illinois south and maybe in Northern Iowa, where there are fewer alternatives for soybean demand in terms of distance to crush facilities, much more dependence on the river for export. And you can really see it on the southern half of those rivers where you see spreads over $2 a bushel, where it might normally be less than $1. So spreads, those producers who might have to sell into that market are going to face very low prices. So, and as Ambassador Doud notes, we've kind of developed this market in the globe. We've kind of developed this global soybean markets where we really focus on exporting soybeans immediately after harvest for 6 months, and then it goes to the South Americans and they export for 6 months. So what you can see here is we are being challenged in exports during our dominant export window. So that means we will push some of our exports into a period where we are facing competition from the South Americans as they're exporting their crop, and that'll put some downward pressure on us in those periods if we try to move those additional beans as well. So I think that this is yet another challenge that is making us less export competitive, and that window, a 6-month window, may pose us some challenges overall in soybean exports. And what are the prospects of this going forward? This isn't just an issue of the Mississippi River, but it is part of an issue of the Mississippi River. You know, this almost cannot last past March 1st, right? We can start to get seasonal rains. The river will start to rise. It is difficult to imagine this lasting past mid-February, so let's say. But we've also got continued drought in the West. You saw reporting by NASS that winter wheat crop conditions are the worst they've been on record. And again, drought conditions continue to play a role here in terms of the ability to navigate on the river and the ability for us to grow crops in the West and to forage for cattle. And then finally, let's talk a little bit about soybeans and talk about a little bit about soybeans and corn. We've seen corn cumulative soybean export inspections rise a little bit in recent weeks, so improving to a more normal pace for soybean exports after somewhat of a slow start. But that's a little bit less of a concern. You notice that at a global level, I said global soybean stocks should expand with a return to a normal South American crop, but our own stock levels in the United States will likely continue to contract. Our current forecast is a continued contraction in carryout stocks and soybeans, and part of that is because domestic crush demand is incredibly strong in the United States. So we have continued to expand our domestic crush. And part of that is being driven by the value of oil. You've seen the value of oil in a bean continue to rise. And so therefore, domestic demand is really playing a role in our ability to export volumes as well too. It's good. It means higher domestic prices for beans. That's not a bad thing, but it does mean that in the domestic circumstance, as we go forward, we will need growth in yields in the United States to meet the internal domestic demand and to even just kind of maintain or slightly increase exports over time. When it comes to corn, I think it's a bit of a different picture. When you look at the pace of outstanding sales for corn sales, we're starting out quite slow. And Ambassador Doud, I believe, quoted a number that he figured the Chinese would need 18 million metric tons. Other countries may provide us some competition on that as rules change, and the ability for the Chinese to source South American crop may provide us some additional competition. At the moment, we're starting out on a pretty weak pace in terms of overall corn exports looking forward. And finally, let's talk a little bit about Ukraine as well, too. You know, we're talking about a large country with a large distribution system where we had an agreement that I've circled 3 ports here. These are the 3 ports for which the Black Sea Agreement was in place. And then there was also movements prior to that agreements over land. The question is what does this agreement look like now? and I can't give you an answer to that. We did see a bunch of ships leave port yesterday carrying several 100,000 tons of grain. Are those the last ships to exit, or will ships continue to exit? Or is this are we going back to overland shipping routes? So one way to look at this is to see some of the different paces that wheat and corn exports have exited Ukraine over the last couple of years, which is the blue line. This is kind of the average, which tells you the seasonal pattern of exports out of Ukraine. And then where we were at in orange was prior to the war. Where we were at in green is essentially the solid green is where we were at in terms of no grain agreement. And then you see that transition to what's going out through the 3-port corridor, and then what's still going out overland. And you can see we are still not meeting kind of the peak of where we would normally be when it comes to wheat exports, but we did move a fair amount of corn counter seasonally during this period, perhaps because we didn't move that corn in March, April, and May, and it was available to export. So we had a bit of counter seasonality here, but this does give you an idea, perhaps, of a starting point to where you think exports may be if the grain deal does shut back down again. Now, I have other concerns about the ability to move grain internally in Ukraine as infrastructure continues to be damaged. Some of those are just the transit by rail. Some of that's electric, some of the signaling, all the other moving and loading has got to be impacted by electricity shortfalls. And then there's just general infrastructure damage that's occurring as well, too, that will make even those overland runs potentially challenging. And as we discussed, when it came to the Mississippi River, where farmers get the lower price when the cost between the southern reaches, say St. Louis and the Gulf, when that cost widens, part of that is a lower price at the port. This is the same thing which occurs to Ukrainian producers. The price on the farm has to reflect that increased cost in order to get it someplace safe to export. And I have real concerns about cash flow for Ukrainian farmers as they continue to think about what they're going to plant for winter crops or envision cash flow for spring crops. It's been a very wet fall harvest season. Corn's about half harvested. You're having to make a choice as a Ukrainian producer, taking some of the physical risk of getting out there to harvest it. How are you going to sell it? Can you store it? Is there going to be a market for it? Or are you going to leave it standing in the field until you know more? I mean, there's some real challenges here in terms of determining cash flow and what those Ukrainian producers will be able to produce next year. And will they need to rationalize production to reflect what they can actually export in terms of export volumes? And finally, I threw a lot of things out there at you about uncertainty. And here's just a couple uncertainty charts as well, too, in terms of a global world economy uncertainty index and a trade uncertainty index. And it is fortunate for me that my job performance isn't directly related to my ability to forecast over the last couple of years, because you've seen the kinds of huge uncertainties that have entered the market over the last couple of years. And I've highlighted a couple more, and I'm not sure that we will, over the next 12 months, cool down this volatility that we've seen in commodity prices significantly as global markets continue to remain tight. The war in Ukraine continues to be a dynamic battlefield with a long tail of uncertainty. And, you know, we're seeing, I'm not even sure what to say about things going on in Brazil in terms of the decision of Bolsonaro to admit the loss of the election, are all things that increase uncertainty in the global market. The market's very on edge about it. Thank you.
Fantastic presentation, Dr. Meyer. And I believe, and Sherry can jump in if I'm wrong, but I believe the presentations, in addition to having this video available, we'll make sure the PowerPoint slides can be shared, because there's just such a wealth of information. I know some of those, that uncertainty index slide in particular, I would like to repurpose in some of my own presentations. So thank you for bringing that forward. So we are going to now go to a Q&A for about 30 minutes between Dr. Meyer and Dr. Countryman. I would encourage everyone to put questions into the Q&A box, and we'll get to as many of those as we can as we go through the conversation. I want to stay on Ukraine to start because it is obviously such an important topic, and I'm wondering if the two of you can comment on the effect of the war on Ukrainian farms directly. Like when you think about where the front lines are and you think about what crops are produced in those regions in the Donbass or the near Kharkiv versus Western Ukraine, which has had less direct conflict. What does it look like for farmers on the ground in Ukraine?
Well, so we've entered a dynamic phase in the battlefield as well too. We saw the Ukrainians take back some land in the north, and I think that adds another element to it. This is more of an impact for wheat. Those areas where there is direct line of contact is more in the wheat area, but it's still the minority of wheat area, and it's certainly the minority of corn area, which tends to be more in that central part of the country that at least has not faced occupation in the near term. Right. So I think that while that is important, and certainly if you are a wheat producer in an area that the Russians currently control, that's on the front of your mind. But I think for your producers who are off at a distance from that line of contact, there remain large storage issues here. And again, I talk about basis, which is, the price that you can get in the world minus what it costs to get you there is what you get for your product. And so I think the Ukrainian producers are facing very low prices when it comes to farm level prices. I think they're having to make choices about storage. If we went back to pre-grain deal levels of exports, we are short storage in the Ukraine. And so as a producer, you may be making choices of, I will harvest this crop and I'm going to leave the corn standing. It's wet anyway. I can't afford to dry it. That produces no cash flow, which means I don't have any cash to think about producing my next crop. And so they're having to face really serious decisions about putting a crop in the ground. In tremendous uncertainty.
And Dr. Countryman, I know you mentioned you're doing some research on this topic with some, I believe, Ukrainian economists in particular. Anything you'd like to add to what Dr. Meyer just said?
I would just highlight that all of these challenges and the uncertainty, damage to infrastructure, damage to storage that was already limited to begin with, it really is discouraging producers from planting for the next year. And so I would say that was one of the highlights, a big important take-home message from Ukrainian colleagues. They have some really, really important damage estimates. So there are estimates across the agricultural supply chain, from machinery to area planted, damage to yields. And so when you take all of these things into consideration, they're finding that a lot of producers aren't willing to plant this coming year. And so I think that, or may not be willing to. And so I would just emphasize that I think that's the real concern that I think is there, is that not only do we have this current disruption, but what are the negative implications going to be in terms of agricultural production and production potential in the next 5 to 10 years? I think we are going to have real negative consequences that last far beyond the unknown duration of this conflict. So I would just say that, farmers don't have a lot of incentives to plant their crops. So the implications of that are going to be far-reaching.
And I think it's important when we have these types of conversations, on the one level to look at the macro and what does it mean for global trade and global grain flows. And on another level to always be mindful of the micro, of the real human tragedy that is happening on the ground. I can't help when I'm looking at pictures of farm fields filled with tanks, but think of our own farmers and what would it be like to have that happening in our own farmland, and what farmers there must be going through. And I just think it's important that we're intentional about that as well. And then I think the flip side of the coin, and I'd like you both to reflect on this, is, there's the demand side of the equation. A lot of this grain goes to Africa or goes to the Middle East. What are the implications of disrupted grain flows on geopolitical stability, and what does that look like as an implication of this conflict?
I'll let you go first this time, Dr.
I'm throwing you tough questions, and
No, this is a
if
great
you feel like it's
question.
outside your bailiwick,
Dr.
feel free
Countryman.
to take a pass too.
No, it's an important question. So Joe Glauber, David Laborde, and Will Martin at IFPRI are doing a lot of really good work looking at the food security implications of the conflict. And so I think when you think about the implications of the war and the potential for exports to not actually make it out of Ukraine, the key thing is who is the most reliant on those exports. And Middle East, North African countries are very reliant on Ukrainian grain and wheat. And so I think that, you know, the implications of this are most negative for those countries who depend the most on it. The other thing that I highlighted in my relatively quick presentation is that not only do we have the challenges with agricultural products actually being able to make it out of Ukraine, let alone not thinking about the future production impacts, but just currently not being able to ship grain, there are a lot of export restrictions that are being placed on other suppliers. So it's kind of a double whammy. So not only will there be potential to not get those exports or imports that are needed from Ukraine, but the imports that you can actually get can be additionally have export restrictions on them that make them more expensive. So at the end of the day, this pushes the food security situation into a much more dire state because of the negative consequences, not just within Ukraine, but other countries that export that are putting export restrictions on the products that they ship elsewhere. At the end of the day, it worsens price volatility and food insecurity in least developed countries and largely hit in Middle East, North Africa.
And I'm glad that I didn't have to say that. So I appreciate that you got that in there, Dr. Countryman, because I agree with you totally, which is these export restrictions only exacerbate this problem, and they don't work for these countries. They usually make things worse. Now, Brian, I want to take the opportunity, as you did, to talk about Ukrainian farmers to say, hey, there's a pragmatic issue here, I think, as well, too, for these countries, which is they may have formerly been customers of Ukraine. Ukraine being able to supply grains cools prices. That makes that wheat a little bit more affordable. Strong dollar is a problem for these countries. And so I do think we have to remain pragmatic about supplying food aid to some of these most vulnerable countries. And so I think that we can talk about, is there enough wheat on the global market? Yeah, there's enough wheat on the global market. Yes, it's expensive, but there are some countries who simply cannot afford it. And so food aid and some of these pragmatic approaches, I just want to add to Dr. Countryman's comments and say, hey, this is an issue, and it's something we need to not lose focus of when we talk about general wheat availability in the global market.
Great. Now I know India had put some trade export restrictions on their wheat stores, as I recall. What are the main countries that have done that? Where do you see that dynamic kicking up most?
We've seen some things like, well, the Indians also put controls on broken rice, kind of some of the lower value rice for exports as well too. And rice, hadn't really been drawn into this volatility at the global level. We were kind of well supplied at a global level, and you see India then kind of putting some clamps on rice exports and kind of drawing rice in with the other grains as well too. But Dr. Countryman, you can fill us in if you've got your list that you'd like to talk about, because we've seen some interventions. The Indonesians, when it comes to palm oil, some of these other things that have induced volatility into the global market just in the last year.
Yeah, I would just add to that. So Russia has export restrictions, and the trade relationship with Russia has just become much more complicated, even if they're willing to ship products. Argentina is another country that is a repeated offender, if you will, for putting export restrictions in place when food prices are high. The other thing that I want to highlight is we have talked about export restrictions on food, but the other really important product that has export restrictions are also fertilizers. So Ambassador Doud mentioned this briefly, but I think the fertilizer situation in the short to medium run, I think it is of extreme concern, because we see countries that are allies are talking to each other, and they're making deals about trying to make sure they can secure sourcing of fertilizer. So not only are there export restrictions in place on fertilizer and food products, there are also some alliances being made to try to ensure that sourcing of these products will happen. An example of that is Brazil. Brazil is having conversations to try to make sure that their agricultural producers will have access to fertilizer. So that could be at a disadvantage for US producers, I think, in the future.
And then you have the Chinese, who are formerly exporters, slap on export controls out of China for these products to keep those prices for their farmers quite low. And so again, here we have somebody transmitting more volatility into the global market.
Boy, they're such heady conversations and such important conversations. I wonder, and I'm going to ask one more Ukraine question here in a second, and then we'll move to another topic. But while we're on the question of export restrictions, talk a little bit about IPEF and whether that type of international collaboration, even though it's not market access driven, even though it's more how countries work together. And I like to think of it as sort of a coalition of the willing, like we're bringing together countries that want to work together on everything from corruption to trade to tax policy. How much does that type of collaboration have the ability to soften some of the edges on things like export controls? How much leverage does that give us in conversations, be it with India or other countries?
Dr. Meyer wants me to go because it's a hard question. I think that Ambassador Doud did a nice job of saying that the idea of countries cooperating, whatever the parameters, is a good thing. So for countries to be communicating and working together, for IPEF, for example, the Indo-Pacific Economic Framework, again, that's 13 Indo-Pacific countries, including the US. China is not a part of that agreement. And I think it's really important to remember, if we think back to that image that I had that showed the Regional Comprehensive Economic Partnership, ASEAN, and the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, mouthful, alphabet trade agreements, the US isn't a part of that. So I think it's absolutely critical that the US is moving forward in the Indo-Pacific Economic Framework, because that gives us a foothold in talking about trade, talking about coordination on labor, environment, production practices in that really critical region that has a lot of potential for growth and increased exports for the US. So at the end of the day, I'm disappointed that IPEF is not a trade agreement, in the sense that there is not market access provisions, which market access just means reduction of trade barriers, of tariffs. So reduction of tariff barriers. So I'm disappointed that that's not a part of the IPEF. But at the same time, it was not too long ago that the US withdrew from the Trans-Pacific Partnership. And so there's a lot of continued frustration that the US withdrew, but there are some reasons for that that are important to remember. The Trans-Pacific Partnership was going to be difficult to get through Congress in the US. And so while for agriculture, we want to see market access, there are a lot of really tricky political issues when it comes to market access conversations. So if there isn't a short-term potential, to have market access, I think this is the next best thing that you could hope for, would be to have coordinated cooperation on these important issues that affect trade, even if market access isn't going to be changed.
And I'm not sure I can add much to that great response, other than to say, I'll just, when it comes to these kinds of exchanges and dialogues and countries' sense of responsibility to their trading partners, I just think of the US, and I think of the way we view ourselves in terms of being a reliable supplier. I would just add, Dr. Countryman had a great answer, and mine's much more simple, but look at how we view ourselves in terms of being a reliable supplier, and even to some extent, the relationships and responsibility that we feel towards those that buy our agricultural commodities. I think you can only win from these type of exchanges that try to round the corners, smooth things, build relationships, give a voice to your customers into your own market that says, don't do this. This is going to harm our great relationship and our customers that we've established.
Wonderful. Thank you for those answers. So 2 quick questions from the audience on Ukraine. I said we would have one, but we've got 2 quick ones, but I'll give them to you both at the same time. First, are either of you aware of emergency funding or loans to Ukrainian farmers to get another crop planted? The questioner notes cash flow is a critical issue. And then another question, can either Dr. Countryman or Dr. Meyer comment on the new state grain company created by Russia and identifying the source of grain from Ukraine or Russia and how this might constrain global purchases of grain? The questioner notes satellite monitoring of some cargo ships appears to indicate that loading at ports and documents are not in agreement. So first, funding for farmers in Ukraine, and second, new state grain company created by Russia. Any comment on either of those topics?
So I guess I'll comment on the second one, which is anything which clarifies the origin of those Russian crop. Russia's going to have a record large wheat crop. They have a record large wheat crop to export this year. To the extent that we're able to identify, I mean, there's friction simply based upon folks' concern about buying grain coming from areas of the Ukraine where the Russians are at, right? There is a concern about that. And if the Russians want to sell, you need to figure out a way to separate those out and be able to, with confidence, buy what is a very large Russian wheat crop. And I think that I think even in normal times, it is difficult and a challenge for us to identify exactly where a cargo comes from and the paperwork underneath that cargo. But now's a time at least to work on it. When it comes to what available for Ukrainian farmers, the only thing that I know that I'm aware of is some support and to be able to store this commodity. Dr. Countryman may know more, but practical temporary storage terms. My argument is I'm not sure that does you a lot of good right now, right? If you store it, yes, maybe that means you can spread out when but you have to dry that grain under what are very, very wet conditions, and you're still going to have to sell it, right? So I'm not sure how much of a problem it solves, but it probably helps make at least some better decisions. Doesn't help your cash flow if it's sitting in a storage silo bag on the side of a field that has no security, though.
I would add, but before we had the Black Sea Agreement to safely, I'll put safely in air quotes, to safely ship Ukrainian grain, there was a lot of conversation and urging of countries reliant on Ukrainian grain not to buy stolen grain. There was articles all over the popular press talking about this problem with stolen grain. I think some of those fears were somewhat tempered a bit when we had the agreement to be able to ship from the Black Sea. I think now that Ukraine is reneging on that deal, I think that brings the sourcing into even more concern or scrutiny. So I would just emphasize that it is a real concern that I think is warranted. What to do about it, I'm not quite sure. Some conversations that we've had are just, even with the Black Sea deal, Ambassador Doud mentioned that any shippers, any ships in the vicinity are going to scatter. And insurance costs have gone through the roof to be able to send a shipment. And so there is a huge liability for companies to even operate in that space. So I think that brings more challenge. On the aid side, there is the U.S. is providing assistance to Ukrainian farmers. So there was initiative from the USAID that was started in July that provides it's an agricultural resilience initiative that does provide funding for Ukrainian producers and provides assistance in that space. Even with aid, I still think that these challenges are pretty extreme for those Ukrainian producers. Seth, did you want to add?
I was just going to add from when we look at FOB prices, I mean, I think, we talk about this friction in order to move wheat out of Russia. When you think of you take a diagonal across the Black Sea, even prior to the grain deal, we saw grain moving in the bottom right diagonal of the Black Sea, moving out of Russia. FOB prices suggest that grain can continue to move. I think with some discount, maybe a little wider discount than normal. But to say somehow people are resisting taking Russian grain, I'm not sure is, there's some friction, right? You want to be able to track, you want to have some confidence of where the cargo is coming from. That's probably more of a problem if you try and buy a cargo out of Mariupol versus out of a Russian origin port. That might be less of a concern. So I want to be careful here about, I think when the Russians say the grain deal isn't working for us, I'm a simple guy. Prices suggest from a FOB price standpoint that grain can move, that maybe that there are other internal issues if they're having a slow start, right? I'm a simple guy. I'm just looking at pork prices. And if I thought there was a lot of friction, if there was a lot of problem, I'd expect those FOB prices to spread, but they're not that unusually large. So I just wanted to clarify that.
Great. Wonderful conversation on Ukraine, and obviously such a critical topic. We're gonna pivot now. I want to talk. We've got a question about Brazil that we're going to talk about briefly, and then a couple of U.S. supply issues before we wrap up. And the question on Brazil, I've been getting news alerts popping up, which I'll read you a couple of those in terms of real-time breaking news from Brazil. But the question was, how long do you anticipate the post-election protests in Brazil to continue? What do you think the effect on current soybean trade and prices will be with blockades affecting cargo movements? The news tickers that I've just had pop up, Reuters reported 7 minutes ago that Brazil's Bolsonaro to accept election loss in speech to nation. That's a report from one of his ministers. That's huge news. If Bolsonaro will accept the election loss and we don't go to a military standoff of some kind, obviously that's a big effect. And then the Guardian reporting, Brazil judge orders police to clear roadblocks by pro-Bolsonaro truckers. So I think two indications that perhaps the Brazilian situation is on its path to resolution. But Dr. Meyer, Dr. Countryman, anything that you would like to add in terms of Brazil, either in terms of the current instability with Bolsonaro in the elections, or more broadly where you see Brazil going in international trade under Lulu?
I guess I'll start really short saying that's really good news, right? I mean, this transition is really good news. We're not in the main part of their export program for soybeans, but it's still good news. Let's understand that. I think longer term, I again, Ambassador Doud was saying, hey, they're going to have a big increase in crop over last year. We need it. Last year was a drought affected soybean crop. We need that big crop. So again, we're talking, are we talking a triple dip La Nina and we're going to have a smaller South American crop? Are we going to have normal weather? Or, cross your fingers, we'll have a big crop down there. So again, I think that in the short term, we need a good crop out of Brazil. Longer run, there are folks that say, well, this will constrain land conversion. But I'll also say that their plan, they still have more room in places like Mato Grosso to continue to expand, say, double crop corn following a soybean crop as well, too. So this doesn't eliminate soybean land expansion. And, there is room for increased double crop corn out of Brazil. And to some extent, we need some of that production in order to cool prices from where they're at now.
The other thing that I would just add to that is that, Ambassador Doud mentioned that, I'll paraphrase, that ag is king in Brazil. And that's true from a political standpoint. Ag is king regardless of who's in power. So again, good news that these hopefully temporary disruptions to transportation lines, hopefully is short-lived. But I would just emphasize that I think, Brazil is going to keep working hard to be an agricultural powerhouse. And I think that that's independent of who holds office. I think that that's just going to continue.
So let me tease on that just one more question. I know Bolsonaro had leaned in on rainforest clearing. He was not protecting the Amazon the way that a lot of people thought he should. And my sense is that Lula is much more on a let's protect the Amazon type of platform. What are the implications of that in terms of agricultural clearing and agricultural expansion in Brazil, or do you expect that to have a material effect?
So I think there'll be to the extent you're stopping turnover of land into pasture and converting pasture to soybean areas, so there's a spill-on effect here when we're talking about major agricultural export production through pasture. That's part of it. And so to the extent that this slows this, you'll either have a slowing of expansion of crop area or an intensification of cattle. There will still be the ability to increase area even with a slowdown of conversion, but it might be through an intensification of livestock within Brazil, perhaps. I think this is a longer run issue, though, that at least there's an expectation it'll slow some of the land conversion that's been happening.
Great. Let's shift to domestic issues to the U.S. and we're going to take just about 5 minutes before we wrap up and I hand the microphone back to Sherry. For domestic issues, we've got a number of questions that I think are all really, really insightful questions. First, for both of you, this year's corn and soybean crops are likely to fall considerably short of early season forecasts. With that in mind, is it a realistic objective to negotiate more trade agreements if we don't currently have an excess of exportable supplies to ship? What are your thoughts on our surplus versus FTAs?
Go ahead, Dr. Countryman. They've opened the door for you. They've opened the door.
That's right. Well, so I would just start and talk about, what do we think about in terms of our trade partners in terms of exports. So for soybeans, about 60% of our exports go to China. That's about 25% of the US soybean crop going to one trade partner. For sorghum, pre-trade war, 90% of sorghum exports were sent to China. We think about corn, the top 3 corn destinations for US corn account for almost 70% of US exports. So one of the themes that we heard overarching when we talked with agriculturalists focusing on trade with China in the future for that relationship, there was an overarching desire to have increased diversification of export partners or trade partners. And so when we think about tight supplies, it's important to think about, what does that sourcing look like? Who are we sending our agricultural products to? And in terms of the free trade agreement or preferential trade agreement front, we're really setting up the potential for US competitiveness in export markets, not just in the short term, but really in the long run. And so Ambassador Doud mentioned the export potential for trading with Kenya, for example. They're a relatively small trading partner now, but are we confident that they'll still be a small trading partner in 15 or 20 years? I'm not sure. I think that there's a lot of growth potential for some of these currently relatively small trade partners. So despite tight supplies, I think without question that the US should be pursuing increased competitiveness for US products all over the world. It's important to diversify our export market partners and account for the potential for future growth in the economy. The other thing I'll highlight is that there are a lot of challenges with having such dependence on a few trade partners that we send to. So China, for example, has been actively working towards self-reliance and has diversified away from the US as a supplier where they can. And so I think just the fragility of some of these relationships is really important when you think about who we send our products to. So without question, I think yes, the US should continue to try to expand competitiveness everywhere.
I'm gonna be a little bit more simplistic perhaps and say we're tight now, but tell me we're going to be tight in 3 years from now. Trade agreements are permanent. We may be looking for, you have producers out there in the audience. I believe in you, right? I expect that we will see productivity gains continue in the United States. We're very productive here. Yes, it's great to have domestic demand, but you want to have good export markets as well too. We're tight now. Tell me that we're going to be tight 3 years from now and that you have absolute confidence in that you don't need any more export markets. I think we ought to be looking for export markets for the future of this sector and not just thinking about how tight we are today.
I also want to add one thing. And another important part of trade agreements is the harmonization of regulations. And so when we think about some of the challenges that we face for US conventional agriculture, for example, having expanded trade agreements with other countries in the world improves our competitiveness and our ability to continue to have these technological advancements in agriculture. So from not just from a market access and tariff perspective, but also on the production system side of things, I think that that future trade agreements are really important for U.S. Ag.
Wonderful. Thank you. Thank you for those responses. And I wholeheartedly agree with the sentiments. Let's go to last question. And I apologize, we're not going to get to all of the questions. We did have a number of great ones. And maybe these are things I'll leave it up to Sherry to close out in terms of whether we can have written responses or other ways to get to some of these other topics. Last question I wanted to tease on is just the question about U.S. rail strike. What do we think? What's the latest on that front? What do we expect post-harvest disruptions to look like? What's the role of government in helping to resolve or keep that from disrupting U.S. ag exports?
So I will not talk policy, and despite working for the government, I will not talk policy and the role of government in that policy. I'm going to go first, Dr. Countryman, so you can talk about that if you would like. But what I will like to do is set this up a little bit and say, okay, the agreement, a failure to agree for the ag sector would have been very bad when the first time through. Now we're in the middle of harvest. Right. So I would say that to some extent, we are in a more difficult position. I will also say folks don't necessarily realize the short time frame over which folks that this causes issues for folks in ag. And I don't just mean, you think about this in terms of the number of days of grain a poultry producer in California has. That's maybe one of the first ones that comes to mind, grain to California. And how many days supply do you have? Not very many days, but it goes well beyond that. If I'm an ethanol producer in the Midwest, I can get all the grain I want, but I only have a limited days space to move out the ethanol. So I need the train cars in order to move the ethanol out. Or even when it comes to a meat packing facility, I can get the animals in, I can get the carcasses out, but all the rendered product that backs up my system is only a couple days. Or if I'm baking bread, I've got to have flour delivered. That's only a couple days. So this is an important sector for U.S. agriculture, and it has effects only over a few days.
Amanda, any one minute to add on anything there?
My quick add-on is going to be that, I think we have these very immediate concerns with the rail strikes. And I want to add that the labor issue has been really challenging for agriculture before this. So U.S. ports in California, for example, are some of the poorest performing in the world. And we've had considerable delays and challenges because of labor issues. So I just want to add on that the labor issues are really far-reaching in the U.S., and there's a lot of challenge in California as well. Don't have a good solution. I think Dr. Meyer did a really nice job just explaining the severity of this problem that I hope there is a very soon resolution for.
Good. Well, with that, let me thank sincerely both Dr. Meyer and Dr. Countryman. You both are just amazing panelists to have on. It's been such a delight to be able to moderate this discussion and to learn so much this morning. And with that, let me pass it to Sherry, and again thank the Farm Foundation for your leadership in the U.S. agriculture, food and agriculture community. Farm Foundation really is an incredible organization. Sherry, I'm handing the microphone to you.
Wonderful, Brian. Thank you so much for your facilitation of this fabulous conversation today. And thank you to each of our speakers for your insightful contributions and to the audience for the questions. So I'd like to thank each of you for making this a robust discussion today, despite the glitches, the technology glitches early during the session. So we appreciate your resilience as well. So I'd like to help, if you'd like to help us continue providing valuable programming such as today's forum, I'll quickly remind you about becoming a friend of Farm Foundation. Check the link again provided in the chat to learn more, and also on our website. Each and every gift to Farm Foundation strengthens our ability to address rapidly evolving issues impacting agriculture, the food system, and rural communities. And we are so grateful for your support. Thank you once again for joining us today, and please make sure you save the date for our next Farm Foundation Forum on December 6th on the upcoming Farm Bill. Until then, we'll look forward to seeing you then. Thank you.